Gold prices look like they're trying to put in a bottom. The big question is from a longer term perspective. Hi, I'm Mark Arbeter. This is S&P's Chart Room. Taking a look at the price of the GLD, which is the Spider Gold Trust, which tracks the price of gold. We have this sharp move down, basically a panic low. Gold has retraced quite a bit of this decline that we saw in the middle of April. Basically, once gold or the GLD started to drop here, it was very rapid, so there was very little, if any, chart resistance or supply as gold, the GLD has rallied back quite a bit. In fact, in here, there's a gap where there was no print of price. Basically, there's no supply in there, so once gold turned around, the GLD turned around, we were able to recapture that gap here. So there's very little chart resistance or supply all the way back up towards the 148, 150 level. That's the good news on the GLD, and that's about it. We think, based on this pattern, this collapse, the GLD, which is sitting here and correcting, looks like this wave up is over, and we should see some sort of big retracement, if not a retest, of the lows down in the 130 plus area to retest that and to put in a potential double bottom. We'll also note that besides the beginnings of chart resistance here up in the high 140s, we also have a couple trend lines, bearish trend lines that come in depending on how far out. You know, it looks like big 148, 147 on this one, and if we continue sideways and extend this trend line out in the 150 to 155 area. Taking a longer term view of gold, and a reason why we are concerned from a longer term perspective is that there is a huge amount of supply or areas where individuals or institutions bought the GLD at much higher prices. You can see we bottomed back in 2011 in the 155 area. We had a couple bottoms here at the end of 2011 in the 148, 150 area. Same thing towards the middle of 2012 in the high 140s. And then we had this one. So there's been a lot of buying off that high 140s, low 150s area over the past couple years. And that represents potential overhead supply or supply of stock if people are still holding it. And it probably represents a major ceiling here for gold. So from a longer term perspective, we think any bottoming process would be bullish from the short term perspective and probably tradable. However, to turn the long term picture at least more neutral at this point, we really think the GLD has to get through this 148, 151 area to at least turn the picture neutral and prevent, you know, another collapse here to lower lows. So there's an awful lot of supply of stock. GLD, I think we can trade, maybe short down to 130, low 130s, and then look for another move higher into this high 140s, low 150s area. Then time will tell whether we can bust through that major chart resistance. This has been Mark Arbeter with S&P's Chart Room.